All right, well, very quickly, we'll be looking at the FGN bonds auction, talking about DMO meeting its domestic funding target for the year 2022. And we are just, in the third quarter. We just got into the fourth quarter. Well, the Debt Management Office, DMO, had a more successful outing at its most recent primary auction of FGN bonds conducted this Monday, compared with its last auction in October. Now, the agency offered its usual 225 billion naira worth of FGN paper split equally across the April 2029, April 2032 and April 2037 maturities. Now, it ended up raising 269 billion naira, or around 1.2 times the amount on offer. The total subscriptions amounted to 344 billion naira, and that's almost 3 times the subscription level for the previous month, suggesting renewed investor interest in the auction and a bid to cover ratio of 1.3 times. The longer tenor benchmark, that's the April 2039 and 2037, saw the most demand, as evidenced by its higher subscription and sale levels of 270 billion naira and 217 billion naira respectively. The stop rates for the benchmarks on offer were 14.75%, 15.2% and 16.2% for the April 2029, April 2032 and April 2037 benchmarks respectively. Now, the marginal rates were between 20 basis points to 25 basis points higher than rates at the October auction, a reflection of the high yield environment. And then they were also around 8 basis points, 55 basis points and 7 basis points higher than those on the secondary market. Now, this is a successful outing, and Ambrose, I'd like you to talk to us about what is responsible for this particular outing. What made it so successful?
Actually, you see, compare the rate of the recent offer and the period, we can see there's an increase in terms of return. That is why one of the attraction. But on the other hand, because there's high rate, high inflation, higher interest rate, that has reflected on this offer that I just made. But once again is that at the same time, it's going to put government on a tight corner, because servicing this debt is also on a high, because you have increased your LPR. It's also reflecting on you borrowing too. And also, don't forget that if you remember what World Bank said, that if CBN continues to use his ways and means yeah, it's going to affect managing inflation effectively. That means before, why people are buying to federal government, it's like a guarantee bond that, okay, no matter what happens, CBN can go to the corner and print money and pay us back our money. And that is why they are able to that, that's why this kind of bond, you buy and go and sleep because you are safe. But on that thing, it's going to cost the government to manage this fund, because high interest rates is going to reflect on it. And people are there because of the return. And despite, for me, the return doesn't make sense. But for those that really don't want
why did you say it doesn't make sense? I mean, because it's, for some persons it's fixed. They would rather be there than come to equities where it's volatile. You're not sure. Today it might be up, tomorrow, they probably would
say so. If inflation continue, and at the end of the day, you are putting
erosion.
You are putting 5 billion, and when you are going to the money cannot even buy what. No, it's only to. That is why financial education is very, very important for all of us in the market, or in the society. You should know how to where to go for saving an instrument. You know where to take high risk and make money. It's all about understanding. But for me, it's a good one. But it's going to put a kind of task on the government, because cost of servicing this you are borrowing, you are going to service it, is high, because your LPR is already high. And for that, the means and ways that I was saying will still be there. Why people are buying that is federal government.
Even the means and ways has been converted to a 40-year bond.
No, I'm telling you that why people are buying that, that it's federal government bond, is secured and not that. Why is it secured?
And you always get your money. Can print tomorrow.
Why is it secured? That's what it means. That is easy.
All right. Well, Mohammed, if you can hear me now, if we consider the net treasury bills issuance of almost 1 trillion naira, the DMO has comfortably met its domestic funding target for the year. So looking at this, do you see the federal government slowing down on its pace of issuance in December? I mean, it has met its targets. Should it continue?
Government, they will continue.
Yes,
why? I mean, why?
They look for easy way out of everything.
Exactly.
Once they have attained the result in one place, they will continue to go to that place, because to them that's a success story. I don't have a problem with borrowing, but payment, like Ambrose have said. Then secondly, again, why are we not using our project as a collateral? We've gone beyond. If people are doing PPP, that's what every economy all over the world is doing. If you look at the blueprint that the presidential aspirants are proposing, towards the economy. It's all a PPP proposal. So when you want to use that to judge APC, then you will say, okay, maybe they are not a PPP people, but actually it's the man in power that decides what area they want to go. For me, they will definitely come back. And like you and Ambrose jokingly said, that's not the problem to pay, because the worst that will happen will print more naira note and will pay. So that's not the challenge. The challenge will always be the foreign debt. How do you have to pay them with what you have? But I think for now, the government are not innovative and not creative enough. So we'll continue to have those challenges.
All right. So what's your advice to investors playing in that space?
Well, Ambrose said it all. Most of the investors playing that space are investors that are looking for safe havens or constant returns. When you look at the names of, the age of those investors, you realize they're in their 60s or 65 or 50 some. So they are looking for safety. And if you're looking for safety at this time of volatility, that's the place you go. But like he said, also the returns will not be commensurate with what you got in case you go into those volatility, which you could go up or go high. But the one stable return, I think, is a good investment for those that want stable return, because they are not looking at inflation. They just want to grow their money a little, and they are not looking at whether it's meeting inflation or not. They're just looking for a safe investment that will still add little to them.
Okay, for those of us who want to hedge against inflation and every other economic, data, what should we do?
You should be in the stock market.
Exactly.
Perpetual, you know that. Because the stock market has been one that hedged inflation, even of recent. If you look at the numbers that were doing comparative analysis that they did even in Nigeria market, they realized that the stock market have hedged inflation by almost 30-something%. So if you look at inflation and you want to see where you can hedge against inflation, it's actually the stock market, especially when you are buying those stocks that are doing very well, but they are low price, their earning per share is good, their PE ratio is good. And also you are going to enjoy not just the dividend payment, but the capital appreciation and dividend payment. So if you want to hedge against inflation, I think the best thing is to invest in the market.
All right, thank you so much. Well, I guess we'll just end it there now. We'll take a break. When we come back, we'll look at the comparative analysis of brewing companies' results. Stay with us, don't go away. You're still watching Analyst Hangout.